Exchange just confirmed what everyone suspected. Official announcement 2026 number 37 dated February 5th. 6 groups of linked accounts caught exceeding intraday position opening limits on silver contracts. SHF has imposed restricted position opening measures on all of them. The massive short attack that dumped 674 million ounces of paper silver in a single morning session was coordinated, and the exchange just cracked down on it. Current prices as I'm recording: silver Western spot $74, Shanghai spot $82, Shanghai futures $99, Shanghai premium $8. Quick note for my new viewers: this channel will never ask for your money, never pitch paid signals, and never run investment funds. Anyone doing so in my name is running a scam. This channel is built on verified data and unbiased analysis, not repackaged hype that copycats sell for clicks. If you want someone telling you silver's going to $1 million tomorrow or crashing to zero, check out the copycats who spin every data point into their pre-written narrative. They'll promise you moonshots on green days and apocalypse on red days, whatever gets the most engagement. I cover both sides with actual numbers because markets don't move in straight lines, and neither does reality. I only operate under OG John AG on YouTube and X. Now let's get back to the analysis because this is about understanding what's actually happening. Here's the timeline. Billionaire Bianing built the largest net short position in silver. 674 million ounces paper silver dumped on Shanghai Futures Exchange. Single morning session, almost double annual global mine production. Shanghai Futures Exchange immediately responds, bans 6 groups of linked accounts from opening new positions, citing abnormal trading behavior. Official notice 2026 number 37. Meanwhile, on COMEX, 3 million ounces physical pulled from vaults one day. 100% futures contracts settling. Physically versus normal, 1 to 3%. Total COMEX inventory dropped to 400 million ounces. Connect the dots. And now CME margin hikes. Third margin increase within 10 days. Maintenance increases 11% for gold futures, 20% for silver futures going into effect after close Friday, February 6, 2026. Second margin rate increase just this week. Again, a margin rate increase despite falling prices. CME raises margin rates again. Silver surging to 18% from 15%. Another CME margin hike makes sense given ongoing turmoil and extreme price swings. ATR on silver futures currently at record $14.17 per ounce or 19.3%, meaning latest increase has merely brought margin requirements in line with daily price volatility. But here's the critical detail. Exchanges don't raise margins out of comfort, they raise them out of fear. If gold were the problem, gold would be hit harder. It isn't. Silver is. High margins equal stress. Stress equals positioning risk. Positioning risk equals too many traders on wrong side. They're not protecting investors, they're protecting the system. You can hike margins on paper, you can't margin call physical scarcity. That's why silver gets hit first. That's why silver gets hit harder. Market is telling you what it fears and it's not gold. Yesterday's forced crash and silver market reduced COMEX total futures. Open interest approximately 6,000 contracts, likely all linked to tokenized silver products on March 26th. Mostly total open interest drops to roughly 137.7 thousand. But it shows how longs aren't speculators but sticking around waiting for delivery, while open interest remains too high compared to total amount of registered silver left available in COMEX vaults to settle future contracts. 688.5 million ounces, open interest versus 103.3 million ounces registered. We're getting to a point where either COMEX breaks or the banksters do. CME March 26 futures. Contract first delivery notice is in 3 weeks, and they don't have many options. They find a ton of metal. They get rid of wild short suppressing price through floor, so it can raise to level where demand equals supply metal or force major. Those are the only paths. Huge drain in SHF vaults today, now left with 350 tons of silver, or approximately 11.2 million ounces. Let me repeat. These artificially low prices are a problem for exchanges because they accelerate reserves drain when there is high shortage in physical market. 15% out of vault in only 1 day. Physical silver vanishing at unprecedented pace. 75% of you aren't subscribed. If this unbiased real-time analysis gives you clarity, the full picture, not moon or zero hype, hit subscribe. We build on truth, not hype. If this adds value, comment OG John AG. Now, the COMEX March crisis math. COMEX data indicate March delivery period starting February 27th, faces accelerating physical drain that could overwhelm available silver. Total COMEX silver deliveries in 2025 hit 474.4 million ounces, more than double the 202.7 million in 2024. Every single month showed higher deliveries year over year. This wasn't fluke. Participants ditching rollovers, demanding physical metal instead. January 2026, normally quiet month, exploded to 49.4 million ounces delivered, up massively from prior years. People front-running March because they're worried about getting metal later. Minor months turning major signals, real fear in system. February 2026, first few days, nearly 19 million ounces delivered, almost matching all of last February. Almost 100% of open interest stood for delivery, way beyond normal 5 to 20%. This isn't futures market anymore. It's turning into physical graph-est. March 2026, the big one looming. Open interest sits around 429 million ounces. If even 25% demands delivery, that's over 100 million ounces needed. At 50% delivery rate, 215 million ounces. At 70%, up to 300 million ounces. Last year's March was already stressed at 80 million ounces delivered. Registered silver dropped from 167 million October 2025 to around 103 million now. 38% plunge in months, accelerating recently with approximately 785,000 ounces draining daily. By March, start could fall to approximately 85 million ounces, far short of potential demand. Eligible silver exists, but owners aren't converting at these prices. They're holding for higher. Even matching last March's 80 million leaves little for May's rising open interest. If drain continues, later months like May, July, September face same squeeze. Shortfall could force cash settlements, force majeure, or shatter confidence in paper pricing. The math doesn't add up. Paper empire of silver is crumbling. Yesterday's sell-off in cryptocurrencies triggered broader deleveraging with heavy liquidations in tokenized silver products feeding through into selling. Pressure across COMEX futures, ETFs, and swaps. Another 350 billion wiped out from crypto market cap today. At the low, crypto, gold, and silver were down combined 2.4 trillion market cap today. Amazon stock falls 10% after reporting Q4 2025 earnings, now down 15% on day, including regular hours move. Apart from dollar strength, recent sell-off in silver-gold ratio closely tracking Bitcoin directionally. In previous two sell-offs, Bitcoin started weakening ahead of silver-gold acting as early risk signal. This correlation points to broader risk-off move across markets with Bitcoin leading shift in risk appetite, not just metals' specific issue for silver-gold to stabilize and recover. Pause or base building in Bitcoin is crucial. As long as BTC remains under pressure, downside risk in silver-gold persists. Watch Bitcoin closely. It's canary and coal mine for this risk-off move. Institutional investors aggressively unloading U.S. equities. Hedge funds sold U.S. single stocks fastest rate since October Wednesday, posting second consecutive daily sale driven by short sales and to lesser extent by liquidating long positions. Also marks fifth day of net outflows over last 6. 5 of 11 sectors experienced liquidation led by information technology, industrials, and materials. Semiconductor and semiconductor equipment, communications equipment, tech hardware faced heaviest pressure. Sentiment among hedge funds shifting. U.S. Embassy warns U.S. citizens to leave Iran now. Geopolitical tensions escalating. Nuclear concerns rising. Risk-off accelerating across all asset classes simultaneously. Stock market sees most amount of fear in almost 2 months. Everything dumping at exact same time. That doesn't happen in free market. Only happens under extreme manipulation or systemic stress. Price down. Inventory is down. That's not bearish. That's physical leaving system. While paper forces price. When VAULTS drain during sell-offs, it tells you everything. The move is financial. The demand is real. Stackers watch metal, not candles. We are witnessing growing disconnect between paper silver and physical silver. Paper shorts pushing prices lower. Physical buyers using those lower prices to drain available stockpiles. Paper can suppress price. Physical removes supply. Singaporeans queue for gold despite falling prices. Monday, retail investors crowded United Overseas Bank Limited, Singapore's only bank offering physical gold. Even as bullion prices fell, Australia, Thailand, China saw similar trends. Physical demand not collapsing, physical demand accelerating into weakness. Paper silver market activity spiked to unprecedented levels. Largest silver-backed ETF SLV trading volume hit record 41 billion Friday. SLV activity higher than any single traded stock in whole world. That level of volume means violent position changes, Forced. Liquidations. Capitulation. Perspective on technicals. Last time silver traded near $65 per ounce was mid-December. Back then, 14-day RSI pushing 80. Sentiment euphoric. Today at same price, RSI sits around 30 and world is panicking. Same price, opposite sentiment. This doesn't mean the bottom is in. We need more data to confirm that. The entity that crashed silver 47% in 7 trading sessions moved with urgency. When moves happen that fast, reversals can be equally violent. But timing that reversal requires confirmation, not assumption. Gold parabola path has not been broken, which provides context, but silver's individual price action still needs to stabilize and show reversal signals before calling any bottom. Now let's address the risks because they're real. CME margin hikes forcing more liquidations. Third increase in 10 days. Bitcoin leading risk off and silver-gold ratio tracking it. As long as Bitcoin under pressure, downside risk persists. Crypto down 46% from peak. Amazon down 15% single day. Hedge funds dumping equities fastest pace since October. Geopolitical tensions, Iran escalating, everything correlated to downside. When everything sells together, it's systemic deleveraging, not fundamental weakness in individual assets. But the structural tension is this. Shanghai Exchange officially confirms coordinated short attack. Banned 6 account groups. COMEX registered down to 103 million. Open interest 429 million. March delivery starting 3 weeks. SHF vaults down to 350 tons. 15% drained one day. 100% physical settlement COMEX versus normal 1 to 3%. Singaporeans queuing for gold. Physical demand relentless. Paper games being exposed real time. Fundamentals haven't budged. 3 takeaways. 1. Shanghai Futures Exchange official notice 2026 number 37 confirms coordinated short attack. 6 groups of linked accounts banned for exceeding position limits. 674 million ounces dumped single morning session. Billionaire beyond Shiming largest net short. Exchange cracked down immediately. Paper manipulation now documented by regulators. Meanwhile, COMEX registered 103 million. Open interest 429 million. March delivery 3 weeks away. SHF vaults 350 tons. 15% drained one day. Physical vanishing while paper dumps. 2 CME third margin hike in 10 days. Silver margins 20% increase to 18%. Gold 11% increase despite falling prices. ATR record $14.17 per ounce. Exchanges raising margins out of fear, not comfort. System stress visible 100%. COMEX physical settlement versus normal 1 to 3%. Total 2025 deliveries. 474 million double, 2024, January 49 million normally quiet month, February 19 million first. Few days, March looming with potential 100 to 300 million ounce demand against 85 million. Registered by month start 3, Bitcoin leading risk off silver gold, tracking at crypto, down 2.4 trillion combined with metals at the low. Hedge funds dumping. Equities fastest since October. Iran tensions, everything correlated down, but physical cues forming Singapore, Australia, Thailand, China. SLV volume record 41 billion, higher than any stock globally. Price down, inventories down. RSI 30 at 65 versus RSI 80 at 65 mid-December. Same price, opposite sentiment. Physical leaving system, paper forcing price. Unresolved tension. Does March delivery break comps with 429 million open interest against 103 million registered and accelerating drain? Or do margin hikes and Bitcoin-led risk-off force more liquidation before physical shortage overwhelms paper suppression? Shanghai Exchange already cracking down on coordinated shorts. SHF vaults losing 15% single day. Singaporeans queuing despite price drops. System showing cracks both regulatory and physical. 3 weeks until March 1st delivery notice. Math says shortage. Risk-off says more pain possible first. Which force wins determines if we've seen the low or if deleveraging completes before structural reality asserts. Do your due diligence. Understand the risks. Third margin hike in 10 days. Bitcoin leading everything down. Iran tensions. Hedge funds dumping. But Shanghai Exchange confirming coordinated manipulation. Banning account groups officially. COMEX registered 103 million versus 429 million exposure. March 3 weeks away. SHF 15% drained one day. Physical cues despite falling prices. Paper and physical are at war. Know your time frame. Invest with logic, not hype. Use your own brain. Don't follow anyone.